welcome back. You're watching Stockwatch with me, Julieta Televi. Joining us to take your stock-related questions this evening are David Shapiro from Sasfin Securities and Ricus from PSG Hole-in-One Ruimsig. If you'd like to send questions, please SMS us on 41392 or email stockwatch@bdtv.co.za. David, Ricus, good evening to you both. David, if I may start with you, because I spoke to Ricus on Monday. And in fact, on Monday to Ricus, I mentioned the Indian elections. And at that stage, it seemed like Narendra Modi was cruising for a massive victory, which of course was upended in the last 24 hours. The Mexican elections had just happened and we had our own to digest. David, we seemed quite stable compared to actually what's happened to Mexico and India. Is it because everyone's just biding time until we have some clarity on our coalition situation?
Well, I'm not sure an 1895 rand is exactly stable.
Yes, well, that aside.
And also banks have come down and retailers have continued to come down. I think it will stabilize. I think perhaps common sense will prevail. I think the ANC knows what it has to do, and I don't think it really wants to risk going backwards another 5 year, by inviting, by I don't know whether they're left-wing parties or right-wing parties anymore. I don't know how to classify the EFF and MK, but nobody wants it. I don't think, other than people at the bottom who want to turn over dustbins and create chaos. I think most working people really want a country that gives them job securities and so on. So I'm hoping that option is taken and that we do get something civil coming out of this coalition, of these coalition talks. But I think then we will really stabilize and things will go better.
Yeah. Although my husband always says to me, Julieta, when you think the ANC is going to do something logical, they will do the exact opposite. So maybe do not hold your breath. But and a viewer says, it looks like David and Wayne should stick to picking stocks and not which political party will win elections. My tongue is firmly in my cheek, says the viewer. But seriously, how do you and Ricus tonight think that financial markets will react to a government of national unity, which is where we seem to be going? Ricus, what would the market prefer? I guess the market would prefer a sort of a ANC, DA, IFP coalition rather than a government of national unity, which could become messy and chaotic.
Yeah, I think you've put your finger on the point there. If one takes a look at, both what's happened in Mexico and India and the sort of rebound we've had, the market doesn't really care who's in charge as long as they know somebody's in charge. It wants certainty. Markets can deal with risk. You can price risk. You can't price uncertainty. And with the government of national unity, I think there's going to be great uncertainty as to whether it's going to hold, how it's going to hold, for how long it's going to hold. So, not that I'm against it as an idea, but I think it boils down to, well, at least we know who's in charge, and we can do something about that. Whereas with the government of national unity, it's going to be difficult because there's going to be horse trading the whole time.
Yeah. In fact, I saw Charlie Robertson, who I think used to work for Renaissance Capital, tweeting, he and Joseph Cottrell, both Joseph Cottrell's former FT Southern Africa editor, talking about, doesn't think it'll be that catastrophic if the ANC and the EFF pair up, but the rand could definitely swing to about 22 rand against the dollar. Is that where you would place your bets if there were such a coalition to be formed? David?
Yeah, you would, because Julius Malema loves it and he knows people are going to respond. So he'll come out with, we're going to nationalize banks, we're going to, every white property is going to be taken away and without compensation, and, those kind of statements. It's not the kind of talk that you want to give any foreign investor or anybody looking at this country confidence. You're going to scare everybody, and you're going to scare your own people as well. So you'll just take us down. I think, you want a party that's going to help rebuild what we have destroyed. And I mean, it's been a systematic destruction of every institution in this country. And I think everybody realizes this, and we want to try and get back to where we were 30 years ago, even if it takes a long time. So I think everyone's in that mood. They don't want, they're so tired of being the pariah of the world. And if we are going to be the pariah again, well then, okay, 22 is fine. I think it's going to go even worse. So,
Yeah. Okay. It's hard to talk about the unknowables. A viewer sent a question in saying, there was quite a lengthy article in the Daily Maverick recently by Michael Power, a recently retired global strategist for 91, in which he comments that he does not believe the US economy is in robust health and says he's not alone in concluding that their bond market is in trouble. We've seen their 10-year bond yields increasing. Not understanding too much about bonds, could your panelists comment on such concerns? Ricus, starting with you. What does it ultimately mean if it's not in robust health? Isn't that ironically a good thing for the stock market?
Well, I think one has to differentiate between not in good health and showing some sign of weakness. As far as I'm concerned, the US economy is in good health, but well, except for the services PMI that came out a little while ago. But yeah, there is a slowdown in consumer spending. 3/4 of American citizens say, well, they're living from month to month. So there's a disparity between the haves and the have-nots. But nevertheless, you've got job growth, even though it's slowing down. You've got companies making profits. So it's not as if there's a calamity staring investors in the face as far as the American market is concerned. It is starting to show signs of weakness. And of course it should. I mean, inflation has been very, very high. Interest rates has been very, very high. At some stage, it will have an effect and the US economy will slow down, but it's not going to collapse.
David, your thoughts there, or the concerns thereof?
I'm with Ricus. I think I'm firmly in the camp now that listen, when we say rude health, if you want to look at Nvidia and you want to look at it at Microsoft, those are in rude health. But I mean, as Ricus says, if you go down to the lower income earners, yeah, they are living from hand to mouth. But I think what we are seeing a slowdown, and I think the concerns are, inflation is not really a major issue. It is coming down. There's some very strange definitions which are causing the distortion, which no one knows how to interpret. And I think that one of the reasons that things are slowing down is you've got very high interest rates there. And somewhere down the line, the Fed's going to suddenly wake up and say, hold on a sec, we've got to act ahead. We can't be data dependent. We can't continue to wait for every bit of data and then decide what to do. You've got to preempt what's going to happen. So I think we're going to get a September rate reduction and probably even more, maybe November, December as well, or one more in that. So we'll hear, I don't know when the Fed meets, this week, next week, who knows? I can't remember. I think it's next week, whatever. And we'll get a firmer view of what's happening. But I think we will start to see rates, and that's why I'm very excited about markets. That going into a period of falling rates, which is going to be good for growth. And it's not in a recession that we're seeing it. If we were seeing it in weaker times, if we were seeing falling rates in weaker times, yeah, that's not great. But we're not. Ricus is dead right. It's just things are slowing down, but it's not that the US economy is really bad or suffering or going to break.
Yeah. I mean, their growth rates are at a level that we can only goggle at and be envious of, unfortunately. I suppose if you are expecting markets to have a zinging second half, it should be good for something like 91, which came out with results today. And the viewer says it came out with bad results. The share price is 5% down. Given our other woes, ? I think their assets under management were £126 billion. So there was a slight decline there. And the viewer says, I like the management and the story. So notwithstanding the results, is this a buy? Ricus, how did you evaluate those results?
We looked at them, and obviously the market didn't like it. And markets don't like pure asset managers. Take a look at Coronation, for example, and its share price, and compare it if we're talking 91, which is a UK-based. Look at the share price of Quarter, which is an asset manager plus a Salesforce. Take a look at PSG Consult, same thing. So that kind of company is not in favor. Doesn't mean that they haven't got good management and a good investment team. I think they do. But if a sector is out of favor and a company doesn't produce spectacular results, you're not going to see a share price move except downwards.
David,
Yeah,
I suppose.
people
Yeah.
are rude. I mean, they really, it's difficult out there. You've got to understand that. Go read any result that comes out. The troubles that everybody's been having from, especially in South Africa. I mean, lots of issues. People are not really rolling in cash because the economy is not growing. Well, how can you expect an asset manager to blow out under those circumstances? It's difficult. Now, ask Ricus. People are not knocking the door,
Yeah.
coming with sacks of, please invest this for us. We got to go big and really scrounge for business. So it's not easy out there. So I thought it was a pretty good result from 91, under the circumstances.
Yeah. I suppose maybe for a lot of viewers, it's hard to square off 91's performance when you look at the very narrow market, which was the big tech and the Nvidias, and you say, well, look, because and the effect that they've had on, say, the S&P 500, and you say, well, markets are booming, probably forgetting that it's only a handful of shares, and the rest of the market is just kind of, hobbling along. Is this maybe the cognitive dissonance that people have to deal with when looking at a 91 or a Coronation, and the go-go stocks like the Nvidias of the world?
Yeah, definitely. I mean, the increase in the share price of Nvidia is responsible for half of the S&P 500's gains for the year, if I'm not mistaken. And that would mean about a quarter of the gains of the All Country World Index, the MSCI All Country World Index. So yeah, Nvidia's got a lot to do with what you see on your screen, but it doesn't tell you a lot about what's happening with the economy and the rest of the market.
It has been, Julietta, if you analyze it, and you go into global markets, I always like to look at 10 years. And over 10 years, if you put $100 into the JSE, I don't think you got $100. You probably got $90 because it's done nothing and the rand's given back. But I mean, even if you look at the FTSE, it's the same thing because the FTSE is made up of commodity companies, it's made up of energy companies, it's made up of financials. It hasn't got those big tech drivers. And the US, the only gainers have been those massive, they call it the Magnificent Seven, but there's more than that. It's been incredible gains in technology, in technology stocks as a result of first the cloud and now artificial intelligence. So it has been very confined, but generally that is how things happen. So the poor people on the side, who are just, poor old 91, they're not exactly a technology company, and they're battling out there like we all are.
Yeah.
So,
So if you ever feel that it's a hard slog and you're the only one, you can be comforted by the fact that you are not alone.
Yeah.
And then a viewer sent us a question with, I suppose, two shares in which he's done pretty well and pretty badly indeed. So the first is Salesforce. And he says, I'm a holder of Salesforce and still in profit. Salesforce seems to be a good business with potential, but sentiment is against it. It missed earnings expectations and has underperformed the S&P 500 for the past 5 years. I have it in my portfolio for growth. Is there any reason to hold on or rather consider another growth stock, such as Novo Nordisk or Eli Lilly? And that question was specifically pointed at you, David.
I've liked Salesforce. We're a bit disappointed in their numbers. They've got a great product, lots of customers, about 150,000 customers. And the only problem is that they make the top line and then mess up the bottom line, by doing silly things. It's one of those companies goes out and buys other businesses as well. I think the only thing also with these results is that, as Benioff, the CEO, explained, he said, not everybody has got a massive budget. They already their budget, they were transforming onto the cloud. That was the digitization. Suddenly AI comes. You can't just go out and keep spending. And I think this is perhaps where some of the disappointments come. It's still a good business. I'm prepared to give it another 1 or 2 quarters to see. I just looked at UBS today. I was looking at a report now. And, they maintain it on their preferred list simply because of the growth opportunities as AI, as digitization, as cloud continue. They will they will get it right below the line. It's when the top line is not there. That's when I start to worry.
Okay, yeah. Ricus, I don't know if Salesforce is a stock that you look at, and then I'll get on to whether or not you would swap out and buy Novo Nordisk, which I imagine is very expensive, or Eli Lilly, or whether you would just maybe independently, without the swapping out, buy those anyway. What are your thoughts, Ricus?
Yeah, just on Salesforce, don't follow that closely, but yeah, it used to be a company that was driven by revenue. They've changed that, so the revenue is slowing down, and they've increased their margins, which didn't used to be important to them. So it's a change in character, and I think it's reflected in the share price. And as David had said, it's what happens below the line that is starting to grab the attention rather than the incredible growth in sales that they had, 5, 6, 7 years ago. Whether I would swap it for a health company, I'm not just sure. That's probably some kind of diversification. No, Novo Nordisk is a meme stock at the moment as a result of their weight loss drugs, which is a bit like Nvidia is a meme stock because of its chips. So as long as there's enthusiastic buyers, the price of both of those will go up. How much, whether you're buying it at a price right now where you're going to make a huge profit 5 or 10 years from now, I'm not too sure, because we are sitting at pretty expensive ratings. But if you've got it, fantastic.
Yeah. David, do you have Eli Lilly rather than Novo Nordisk, as I recall?
Both. No, both.
Oh, both. Okay. Would you buy them as growth stocks now, or do you think maybe they're getting a bit heady?
When they can sell everything they produce, those are the kind of companies you want to own. In fact, they can't keep up. And I think we're getting a distortion. We're getting the wrong view. These are not celebrity drugs. These are real drugs, that do real things. Whether it's obesity, they do address obesity, and very successfully, and they do address diabetes. They have for a long time, both those companies. So don't brush that aside. There's a lot of criticism. They can't get enough. I don't think they call them pens. With you inject yourself, things will change. They'll get oral medicine, to address these as well. So these are companies that have been in those areas for many, many years, competing with each other, but almost in a friendly way. When I say friendly, they offset each other, or complement each other is a better word. So I like them very much. I don't think you have to be too clever. You don't have to be too clever to buy them. Just say, okay, that's why I love Ferrari. Same thing. Every Ferrari they make, they sell. There are people out there who just buy them. So those are the kind of stocks I love. So I would continue. Don't be silly about it. But I mean, just
Yeah, it's hard not. Well, yeah. I mean, look at that chart. It's a chart that you must sort of go to, that you could take to bed at night and cuddle, David, because it is such a fabulous chart certainly over a 1 year. And I'm looking at Eli Lilly going from $450 to $836. I mean, it's staggering. Okay, so you still like it. Unfortunately, the viewer's other share, and it was a question directed at Wayne, who's unfortunately not with us this evening. It's Sibanye Stillwater, and he says, I'm 57% down and counting. Time to take the money and run, or is there any reason to stay invested? Ricus, if it were you, what would you do?
It's a company saddled with debt in a environment that's not very pleasing for them, seeing that they derive quite a lot of their earnings from the Palladium group of companies. So if I want to be in something that can survive through a cycle, I'd rather be in a company that hasn't got debt, because it's going to be volatile depending on what happens with the end product that they sell. So I'm by nature a little bit more conservative. So I would say, okay, fine, keep some of it, but rather take the money you've got and go and invest it in, something that grows. And as David said, go and buy something which sells every single thing that it manufactures at the price at which it wants to sell it, rather than having to rely on whatever the market wants to pay for it.
Yeah. The chart we had there of Sibanye-Stillwater, I'm not sure if it is a US chart or some instrument because it's not the actual RAND share price, but it does show the decline in it. David, would you be adding to your position if you were down 57% and you really believed in the company?
I think commodities are going to go. I think we are going to, as things start to improve with rates coming down and growth starting to pick up again. The problem is that the PGMs are just looking awful. If you are going to do anything, probably just go for a Glencore or a BHP, something like that. Anglo's has got a lot of issues ahead of it. It's got to kind of restructure itself and kind of get itself out of the hole that it's in at the moment. But, you go the Rio Tintos, all of them, there are some very good mining businesses, that are well positioned. But for the meantime, I think platinum PGM companies are really battling. And I don't know why. We just don't see any kind of bottom.
Yeah.
Even palladium is going below 900. It's heading that way. And platinum, is also below 1,000 again. So, and not showing any signs of bottoming, which is a bit of an issue.
Yeah. And consider that palladium went up to $3,000, which is when these guys were printing money, but that feels like quite a long time ago now. And then the last question before stock picks: what do you guys think of Scottish Mortgage and Trust as an IT-focused investment vehicle?
Where did it get that question from?
I don't know. But it has foxed me too.
Scottish where and who?
Scottish Mortgage and Trust, and I'm sure
Scottish something widow fund or something like that. But they were more an institution than anything else.
Ricus, have you not? I feel like Ricus has picked this before on the show.
Ricus could know.
Many moons ago, and then they had a change in management where their leader, if I can call it that, stepped down. It's been taken over by a board. If they are still doing the philosophy that I really like, where they've got a lot of companies in their portfolios, and their philosophy is, forget about concentrating in investment. Your opportunity cost in missing out on something is far more than trying to concentrate and beat the market. So prior, about 4 or 5 years ago, they were still doing very well. They also got lucky with Tesla, by the way, which formed a huge part of their portfolio. I'm not sure what current management has done. I do keep a lookout on the share price, and it's recovered from what was a severe decline, partly because of what was in their portfolios, but also because of really a bit of a fight at board level. But it's if you're looking for a different kind of fund management style, a very interesting one.
Okay, well, actually, they've got NVIDIA, ASML, Moderna, Amazon, Mercado Libre, Space Exploration Technologies, Tesla, Ferrari, Northvolt, Spotify, and Meituan. So they're actually...
And about 200 other companies below
that's
that.
the problem,
Which is great. I mean, that's why they've done well. They picked up Tesla when nobody knew about it. They picked up NVIDIA when nobody knew about it. And that's their philosophy. It's a really interesting company.
Okay. Well, getting to your stock picks, I haven't left you more than about a minute between the two of you. Apologies. David, what are you looking at this evening?
Going for the S&P on the basis that I couldn't find any particular stock. I'm looking for a geared play on reduced rates in the US. There are going to be a number of them. And I just thought, hold on, if rates do come down, the S&P is just going to go. If you want to feel safe, just go into that. You can even go into the trackers back home.
Yeah,
so,
easy.
It's a chicken's way out. But
that is a bit of a chicken's way out. Okay, we shall hold you to something more specific next week. Ricus, how about you?
Deutsche Telekom, not because of the European business, which didn't do well which did well on their last reporting, but their expansion in the US is gaining traction. They are about, hopefully, buying another cellular company in the US. It's US Cellular, which is based in rural areas where Deutsche Telekom has its advantage, mainly through its technology, where they are at a very, they're at the high end of the spectrum. So they're providing 5G in rural areas. absolute leaders, and it's a growth vector for Deutsche.
Well, Deutschland über alles is the motto in our household, obviously. So Deutsche Telekom for you, Ricus, and S&P 500 for you, David. We shall leave it there. Thanks very much for joining us this evening. David Shapiro is from Sasfin Securities. Ricus Reed is from PSG Holding One Ruimsig. And up next we have The Close. Stay with us.